When people talk about state-related taxes in retirement, almost always they're talking about state income taxes. That's where most of the videos and most publications go. And in conjunction with state income taxes, the discussion almost always moves on to Florida, which is a zero income tax state with good weather most of the time anyway, and has a high proportion of retirees in the state. But ignoring 5 other taxes that are state related and impact retirees is a bit like talking about the beach and saying it's all about the sand and ignoring the sun, the ocean, and the temperature. In this video, we're going to talk about 6 state-related taxes that affect mainly retirees and their families. And along the way, we're going to compare these 6 taxes in 2 similar-sized states and vastly different taxing strategies. The first is New York. That's the 3rd largest state in the country. And the 4th is Florida, the 4th largest state in the country. In 2024, New York had a population of 23.4 million, and Florida had a population of 19.8 million. So very similar in size. All right, let's start off with the obvious one and move on from there. In the U.S., there are states that don't tax their residents with income tax. Those states are Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. It's worth pointing out that while New Hampshire doesn't have a state income tax, it does collect a flat 3% tax on interest and dividend income, so that 3% would affect a lot of retirees living in New Hampshire. On the other end, California's top income tax rate is 13.3%, Hawaii is at 11%, and New York is 10.9%. And to get the analysis rolling on the New York versus Florida discussion, how much did New York collect in state income tax in 2023? The answer is $53.8 billion, and in Florida, the answer is 0. Before we move on to the next point, I want to alert you to a new course that I have coming out. It's called Social Security Simplified. It's a course I'm very proud of. I've spent over 500 hours working on it. It's been tested by a dozen people now, so we've worked all of the bugs out. So look forward on August 1st. It's something that I feel will be very impactful for someone who's getting close to taking Social Security. More on that later. The next is state-level tax on Social Security. Now, if you're in a state that doesn't tax income, you're not going to have tax on Social Security. But there are 9 states that do tax Social Security, and so therefore you can assume that none of those 9 are states that have 0 income tax. What are those 9 states? Colorado, Connecticut, Minnesota, Montana, New Mexico, Rhode Island, Utah, Vermont, and West Virginia. I will also point out that the majority of these states that do tax Social Security have pretty significant income thresholds so that most people still won't pay tax on their Social Security even if they do reside in one of these states. And since we've already covered total income tax in Florida and New York at the state level, we don't need to cover that off again in this section. It was already covered off in the first section. Now, up until this point, in the states that don't have income tax on their residents, it's not really clear how they pay for things like police or road repair or education. The next part of this video is going to discuss how, in fact, these states raise their own funds. The next tax is the average property tax rate for the state. Now, the reason I use the term average property tax is because most of the time, with the exception of just 1 or 2 states, the tax on property is done at the municipality level. In other words, the city, the town, the county, etc. What this means in reality is that you could have 2 nearly identical homes within a few miles of each other that have radically different property tax costs simply because one is in one county and one is in another. And also the dollar amounts that we're talking about at the state level are a little less accurate because in many states you're consolidating dozens, maybe even hundreds of municipalities and taking all of that information and saying that this is what the state charges for property tax. The state with the lowest average property tax rate is Hawaii, coming in at 0.26%. Hawaii is also the most expensive state to live in overall, coming in at between 180 and 190% of the national average, depending on which survey you look at. And the reason is simple. Most of the consumption that happens in Hawaii is with goods and services that were created outside of the islands. Hawaii is one of the few states that actually taxes property tax at the state level, not at the municipality level, and then takes the funds from those taxes and uses them for schools and other services on the islands. Alabama is number 2, coming in at 0.40%, and Nevada is number 3, coming in at 0.44%. On the other end, New Jersey comes in at 2.08%, Illinois 1.95%, Connecticut 1.78%, New Hampshire 1.61%, Vermont 1.58%, New York 1.54%, and Texas, which has zero state income tax, comes in at an average of 1.54%. So how much did the New York municipalities collect in property tax in 2023, the last year where we have a full set of data for both New York and Florida? The answer is $66 billion. How about Florida? The answer is $43 billion. Next, sales tax. Now, this is the offset for most states. If they don't collect state income tax, this is usually where they derive most of the state revenue. There's only one state that has zero state income tax and zero sales tax, and that's New Hampshire. But New Hampshire's property tax rate is one of the highest in the country at 1.61%, and they still charge an excise tax on things like gasoline. By the way, for those of you that want to know the difference between an excise tax and a sales tax, really it's fundamentally the tax is built into the price. So when you buy a gallon of gasoline, they don't break down the taxes that go into that gallon. They just say it's $4.50 a gallon or whatever it is in your state. So taking excise tax out of the equation for a moment, there are only 4 states that don't charge sales tax. These states are New Hampshire, Oregon, Delaware, and Montana. Honorable mention includes Alaska at 1.82% and Hawaii at 4.5%. These are the lowest state sales tax states in the United States. I'm not sure I could say that 5 times fast, but you know what I'm talking about. On the other end, there are 5 states in the United States that have sales tax over 9%. Louisiana comes in the highest in the country at 9.58%, Tennessee at 9.55%, Arkansas at 9.45%, Washington at 9.38%, and Alabama at 9.29%. So for the analysis we're doing for this video, how much did New York collect in sales tax? $20.7 billion. How much did Florida collect? $44.2 billion. So more than double with a smaller population. Does this mean that people in Florida spend more money than people in New York on goods and services that have sales tax? Well, yes, sort of. The composition of the Florida sales tax number is a bit skewed. 65% of that number comes from residents, and the rest comes from tourism and businesses. So on average, yes, but it's not dramatically different. Next up, estate tax. Estate tax is the tax on assets that people owned when they were alive, when they pass, and they subsequently go to their heirs. Now, 12 states have what's called an estate tax exemption. Now, it sounds like a good thing, but it's not. It's the opposite of a good thing, because that means that there's an exempt amount from estate tax. If there are 12 states that have an estate tax exemption, that means 38 states don't have any estate tax at all. Now, what are the states that have an estate tax exemption? Meaning that if you hit the threshold, beyond that threshold, there's going to be estate tax due to the state. Connecticut, Hawaii, Illinois, Maine, Maryland, Massachusetts, Minnesota, New York, Oregon, Rhode Island, Vermont, Washington, and also the District of Columbia. The rest of the states do not have estate taxes. So how much did New York collect in estate taxes? $1.5 billion. How much did Florida collect in estate taxes? 0. Finally, once the estate gets taxed, the last tax that the deceased will pay under ordinary circumstances, there is what's called an inheritance tax in some states. This is the tax that the person receiving the assets pays on the assets that they receive. There are 6 states that have inheritance tax. Maryland has an inheritance tax that ranges from 0 to 10%, depending on the size of the inheritance. Kentucky, 0 to 16%. Pennsylvania, 0 to 15%. New Jersey, 0 to 16%. Iowa, 0 to 2%. And Nebraska, 0 to 15%. Neither New York nor Florida have an inheritance tax. Now that we've gone through all of that, let's answer the question, how much does New York receive from its total taxation? Not just state income tax, but everything. And the same question for Florida. The answer is that in 2023, New York received approximately $142 billion, and Florida received approximately $87.2 billion. This means that the average New York resident paid an average of $6,068 across all of the tax categories in 2023, and the average Florida resident paid an average of $4,404 in 2023. Of course, averages don't mean a lot here, but directionally you can kind of get an idea of what the state spends on each resident with taxes. Of course, these numbers are quite skewed because both states have tourism and other factors that really reduce the amount that the resident is paying, but it does give you a good idea of the amount that's being spent per resident on services from the state. If you like this video, check out that video. Here's what you can now do at age 59 and a half. And don't forget to look for my new course announcement on August 1st. This is Jeff Schmidt, and I will see you in that video right there.
Holy Schmidt!